All right, we are live. Hello, everyone. Boris Musheyev here. Let me know if you are joining us live on YouTube. So this is a YouTube Q&A, tax strategy Q&A. So any tax questions that you bring, I answer. This is the time to shine for you with a tax strategy. Okay. Hey, Caleb, good to have you here. All right, let me just get a couple of things. You hear me okay, right? And Mariana, say hello.
Hi.
You guys hear Mariana okay as well? Let me know if you guys hear Mariana.
Subscribe if you hear me.
All right, cool. Let's get that going. Perfect. I think I needed to do something else. No, we're good. Oh, that's what I was going to do, split screen it for you. Yes. Give me a second, everyone. Let me just fix a couple of things here. Display settings. Cool. Okay. Welcome to live YouTube Q&A, guys. I'm going to try to do this weekly again. I know I dropped the ball on this, but this is the time where you get to ask me any tax questions. We got Mariana here. Mariana, say hello. I think we've got more people joining in. Hey, anybody that asks tax questions, we're going to give away free stuff. Cool. All right. Do we have tax questions? So what are we giving away, Mariana? We are giving away. So the person that asks the most tax questions, we're going to give away one thing today. And that thing is going to be a 3-year look back of your business and personal taxes. That's right. A tax advisor is going to review your 3 years worth of business and personal taxes. Okay. Which is completely free. All you have to do is just ask tax questions so that I can help you with your tax strategy. So Caleb, I know you already said hello. Let us know if you guys have any tax questions, and let's get rolling on this. I'm gonna give it 3, 2, 1. Okay, cool. While we don't have any tax questions, I'll tell you what I was creating some YouTube content today, and one of the things that I was working on is a short-term rental tax strategy. And really, this works really well for any business owner that has profits, right? You've got an s-corp corporation, you've got profits, you want to reduce those profits. One of the ways is to invest in real estate. But losses generated from your real estate are not always tax deductible. They could be considered what's called passive losses. Comes the short-term rental tax strategy with the IRS definition, okay, and says those losses produced from your real estate from a short-term rental are actually not passive losses. They're 100% tax deductible. And in order for you to qualify under the IRS definition of a short-term rental, you have to really meet 3 tests, okay? Test number 1 is the average stay per tenant has to be 7 days or less. So that means that if you've got a tenant number 1 staying 2 days, tenant number 2 staying 10 days, the average stay per tenant is 6 days. So that means that would qualify. Let me just fix my camera. Sorry about that, guys. There you go. That's better, I think. Okay. That's the first test. The second test that you have to meet. Hey, Valerie. So we're saying anybody that's new that joined, if you guys ask questions, and the person that asks the most questions gets a free 3-year look back. That means we review your tax returns, and a tax advisor is going to review your personal and business tax returns completely for free. So we want everybody to participate. Okay. Now, I was talking about short-term rental strategy. In order for you to qualify to be able to take losses from a short-term rental against your business profits, okay, you need to meet 3 tests. Test number 1, the average stay per tenant has to be 7 days or less. Test number 2, active participation of 100 hours. That means you have to actively participate in your rental property in a short-term rental for 100 hours. Okay, so that could be putting up the listing, cleaning the place, or traveling to it, whatever that may be. And the third test is that you cannot spend more than, another person cannot spend more hours than you. So let's say I'm going to write not more than you. That basically means that if you got a property manager, okay, and you spend 120 hours, but your property manager spent 150 hours, then you don't qualify for this. So you want to make sure that you meet these three qualifications to be able to produce losses from your real estate. I actually put together a great YouTube video on this that we're going to be releasing next week. Now, for anybody that just joined us, anybody that asks the most tax questions is going to be raffled off to win a completely free 3-year look back of your business and personal taxes. Now, I think we already have a couple of questions coming in, Mariana.
Yeah.
So let's get going with that.
All right. Caleb is asking, hi, Caleb. Contractor versus employees. What is the advantage or disadvantage?
Okay, so Caleb is asking a question. W-2 employees versus contractors, okay? So what's the advantage and disadvantage? Well, first of all, in order for you to even determine who you have to pay as a W-2 or a contractor, you have to see where do they qualify. And they have to qualify under the IRS's definition, okay? The W-2 employee is anybody that works for you directly and you manage their hours, you manage their work, and really they're under your management. Contractor is somebody who's completely independent of you and of your schedule. Now you might say, well, Boris, I've got a person that I want to hire. I could, go either way, depending, I can qualify them either W-2 or a contractor. What's more beneficial for me? If you hire them on a W-2, okay, you're going to pay for them payroll taxes. Rough estimate of the payroll taxes is about 10%, okay? If we take into account federal, state, federal, if we take into account Social Security, Medicare, federal unemployment, state unemployment rates, it's about 10%. So for every $100 that you're going to pay a W-2 employee, you're going to pay $10 in payroll taxes, okay? So for every $1,000, Caleb, you're going to pay $100 in payroll taxes. So if they're a contractor, then you don't have these taxes, but the contractor picks up this portion of the taxes on themselves. So some employees may be like, no, some people will be like, I don't want to be a contractor. Or some people will be like, you know what? I do want to be a contractor because I have expenses to write off. So for you as a business owner, Caleb, the most beneficial way to be if you have contractors. But obviously, depending what industry and the business you're in, you might want to have W-2 employees as well. Because W-2 employees, that means longevity, loyalty, they stick around longer rather than being a contractor. But for tax purposes, contractor. All right, for those of you that just joined us new, we're giving away a free tax return review of your business and personal taxes, 3-year look back. If you participate and ask tax questions, we're going to raffle that off. Mariana, what's the next question?
A question from Vicente. Vicente asks tax strategies for house flippers. I'm wondering if this is a follow-up. He's asking, what is QBI and how to use it for an s-corp flipping houses?
Vicente, you said, right?
Vicente.
Okay, so number one, she wants to know tax strategy
For house flippers.
for flippers. Okay, so this is actually a great question, Vicente, okay? And based on your follow-up question that you're asking, how do you do a QBI for house flippers in an S-corporation? So I'm assuming you are already an S-corporation. Let me know if you are or not. But a flipper is same thing as anybody else that has a trade or business.
She's an S-corp.
You're an S-corp. Okay, so you're a flipper, okay? So you're just like a regular business next door that is also any business, a trade or business, okay? You're entitled to all the deductions that you incur for the business. And the tax strategies for you would be, there's a lot of tax strategies, right? Depending who's your tax advisor and what type of tax strategies you're getting from your tax advisor. But you can do accountable plan with being flipper in an S-corp. You can do Augusta strategy. You can do hiring children. You can do 401k, solo 401k, SEP IRA contributions, whatever you want, okay? You can also do PTET tax strategy, which is really, really a huge deal for a lot of business owners. And you do qualify for a QBI. And I think your follow-up question is that how do I do QBI? Well, whoever does your taxes, just make sure they check off the box on the tax return to take the QBI deduction. Because a lot of times what happens, tax preparers, they prepare the return and they forget to check off some boxes on the tax, on the preparation software. And one of the essential deductions that they miss out is a qualified business income tax deduction. because QBI is 20% of your profits. So if you make $100,000 profit, that is $20,000 in deductions. And if you're in a 30% tax bracket, that is $6,000 in tax savings. Easily missed. We've amended the number of returns for clients who just work with tax preparers, not checking off properly that they qualify for the qualified business income tax deduction, which is really a gift from the IRS. All right, Mariana, next question.
So Vicente says exactly.
Good.
Okay, Carlin's.
So for those of you that just joined new, we're giving away a 3-year look back. We're going to be raffling it off depending on who's asking a question. If you're asking questions in the group, we're going to put you in that raffle, and 3-year look back. It'll be done by a tax advisor. Also, please like the video if you like it so far, so that YouTube can push it out to more business owners and we can help them save money on taxes. All right, next question.
Question from Carlin's.
Carlin's. Okay.
How do you perform an Augusta rule on a tax return itself? Do you input expenses on Schedule E?
How do you perform an Augusta rule on a tax return itself? Do you input expenses on a Schedule E? So let's just explain what is an Augusta rule, okay? Because I'm not sure if I understand your question, but Augusta rule basically allows anybody in America, okay, anybody in America to rent out their personal residence up to 14 days tax-free. So meaning, say, if the residents have not been rented during the year for more than 14 days, then everything that you make for renting it out is really tax-free, okay? Now, you as a business owner have a huge advantage of being able to rent out your home to your S corporation for business meetings. If you meet with your vendors, contractors, or if you're meeting, doing a team building activity, you can have board meetings with your board members. At the same time, you can have a holiday party, okay? So what happens, S corporation pays you, in this way, we got Carlin's, right? A rent expense for renting out. Let's say it's daily rate. I'm assuming, let's just say $500. The S corporation is going to pick it up as an expense of $500. Carlos, on the other hand, will not pay any income tax on the $500 that he received. Hope that clarifies the question. Next question.
Question from Caleb.
Caleb, what's going on? Welcome again.
What are the qualifications for QBI?
So let's just do QBI, okay? And then we're gonna do a branch, which is a non-SSTB and SSTB. To answer your question, Caleb, really, to be qualified for qualified business income tax deduction, which is really a gift from the IRS. This was when President Trump passed Tax Cuts and Jobs Act, when they basically reduced down the C corporation taxes to 21%. The pass-through entities got what's called a QBI, 20% qualified business income tax deduction. There's a formula involved, but we're going to keep it very simple. It's 20% of your net profit in the business. Now, if you are a specified service trader business, such as yours truly, accounting, okay? Or if you've got attorneys, doctors, certain type of consultants, and a couple of other very niche-based industries, okay? You do not get a QBI if your income level goes certain threshold. I believe for married and filing joint, it's $400,000 and change. For non-SSDB, anybody that is not in this bucket, okay, basically qualifies. Regardless of your income, regardless of your taxable income. Now, there is a strategy involved for QBI for non-SSDB. Like, for example, if you are a sole proprietor, or you have a single member LLC, or in fact, even an S corporation, and you go over the threshold, in our case, it was like 400,000 and change, and you have no payroll, like, you'll not qualify for QBI. We've seen many of those happen, and that's because the business owner didn't know that's the payroll. They didn't know such thing as QBI. They come to a tax preparer once a year, and all of that stuff was missed. So most business owners do qualify for QBI, and if you run payroll in a business, either for yourself or your employees, most likely you will get a QBI if you're not SSDB. Hopefully that answers your question.
Retail sales S-corp.
Yep. as long as you've got Caleb, right?
Yeah.
Retail sales s-corp, as long as you have payroll, retail sales s-corp definitely qualifies for SSTB. And if you're under the threshold, you will still get it. And if you're over the threshold, as long as you have a payroll, you will get that as well. Next one.
Vicente is asking, does it make more sense to pay kids through the s-corp, or is it better to have an LLC management company under an s-corp to pay kids that are under 18 years old?
So, I wrote kids. It's a kids. Okay, so the question that she's asking Vicente, right? So, can we hire kids from the S-corp or family management company? The thing is that the IRS is very clear on the rules, okay? Kids have to be hired by parents. Done deal. They say, hey, if you are a parent, you have a sole proprietorship, you hire your kids, great. Pay them under the standard deduction. They don't pay any income tax on it. I think, what is it? For this year, it's $14,600. And you as a parent are not going to pay self-employment taxes, which is Social Security taxes. You're like, okay, great. But a lot of business owners are not sole proprietors. They have an S corporation, right? And IRS says, no, hold on a second. S corporation is not a parent. If you're going to hire your kids from an S corporation, you've got to pay payroll taxes. Between you and your child, it's 15.3%. Okay? So that means for every $10,000 you're going to pay your child, you're going to pay $1,500. Then there's an option of you to maybe opening up a family management company, a management company that will provide management services to your S corporation. And this family management company could be a sole proprietorship, which is a DBA, or even a single member LLC, or even a parental membership partnership LLC. Because IRS says, okay, LLC can be considered as a parent as long as it's owned by the parent, because it is a disregarded entity. So in this case, by paying them from the family management company, you will not pay the payroll taxes, which is in our example on a $10,000 of $1,500. So I'll let you make that decision, Vicente, if you want to set it up this way or not. But you definitely got to speak with your tax advisor, because you want to make sure you qualify. The family management is set up properly. The kids are getting paid properly. You've got the timesheets and you've got the contract between the S corporation and the family management company. So definitely speak to your tax advisor, please. Next question.
Question from Andy. Hi, Andy.
Hi, Andy. For those of you that joined new, we're giving away free 3-year look back. We can only raffle off your name if you're participating in the chat by asking a tax question.
Question from Andy. What's involved with closing out a solo 401k?
Oh, I wouldn't know that, Andy. What's involved in closing out a solo 401k? Now, you can close it with a financial institution. I believe your money will still stay there, but you can open up another 401k account and transfer their traditional IRA, like with Vanguard or anything of that sort. But I don't think there's any. I'm not sure on the legality side what it takes. So honestly, with the taxes, you're fine. If that's your question. All right, next question.
Question from Vicente.
Hey, Vicente.
With the intention to reduce paying taxes under an S-corp, is it better to pay myself bi-weekly or take smaller payment and a bigger distribution at the end of the quarter or end of the year?
That's an excellent question. Okay, I get that a lot from business owners. So Vicente is saying, look, I've got an S corporation. In order for me to maximize my savings, right? Max out savings. Do I need to do, what did she say, a bigger chunk or a smaller chunk of salary, correct? So it's
Yeah, bi-weekly or smaller.
Bigger or smaller salary. And then I can make a big distribution. When you have an S corporation, all IRS cares about is that you pay yourself a reasonable compensation. Let's say a reasonable compensation in your business is $80,000, okay? It doesn't matter how you pay yourself $80,000, because your business could be seasonal, right? A lot of business owners ask, well, Boris, I don't make any money during the first 6 months of the year because my business is very seasonal and it starts in the summer, goes into the winter. So how do I pay myself from January to June? Don't worry about it. As long as your reasonable compensation, what you're supposed to pay yourself reasonably from the S corporation equals, let's say in our example, it's $80,000, then you're fine. You can take out distributions now, you can take out distributions later, or whatever that may be. Okay, for those of you that's joining new, we're giving away a free 3-year look back of your business and personal taxes. Okay, all you have to do is just participate in our Q&A and ask your tax questions so that I can answer them and so that you can save money on taxes. All right, Mariana, any more questions?
Not yet, guys.
Oh,
Let's
we
ask
answered all the questions.
Yeah.
Wow. Okay, so we're going to give it 5 minutes. If we don't get any more questions, we are going to call it a day. And then we're also going to do a raffle in about a couple of minutes.
Oh, we got a question.
Let's go.
Question from Carl Hens. When you're paying yourself a reasonable salary, does it have to be by W-2 or can it be by distribution?
Reasonable salary has to be a W-2. The reason is, Collins is asking, hey, when I pay myself a reasonable compensation, does it have to be on a W-2 or can it be through distributions? First of all, the whole reason why you as a small business owner set up an S-corporation is so that you can take distributions and not pay self-employment taxes on your entire net profit. But IRS says, wait, if that's the case, then that's okay, but you've got to pay yourself a W-2 salary, a salary on a W-2, so that you can pay your share portion of the Social Security and Medicare taxes. Okay? So as long as you pay yourself a reasonable compensation on W-2, everything that is left over in the business for you to take out, you can take out as a shareholder distributions. All right, next question.
We had a question, but it was retracted. If you have any questions, please post them in the chat while you still have
Great.
words.
We're going to meanwhile start doing the raffle. Mariana, you
Oh.
want to put all the names that people that asked questions and kind of
Yeah,
we're doing a little hat. We don't have a hat. I'll put it like in a box.
I got 2 questions.
Let's go. While you do that, let's get the questions because we're going to be wrapping it up soon.
Question from Andy. How does one decide what a reasonable compensation is?
How does one decide what a reasonable compensation is? Hello, Andy. Okay, so what is reasonable compensation? And how to decide? Basically, the reasonable compensation based on what IRS says, right? What is the person holding your job and title is currently making on the market? And you're like, well, I don't know. I wear many hats. And that's the strategy. Let's, for example, use an attorney, okay? Attorney normally could be making about $175,000 on a W-2. But if you're an owner attorney, you're probably not doing 100% of the time any legal work. Maybe like 50% is legal work, right? You are servicing your clients, doing service delivery. 25% of the time could be marketing. And let's say another 25% of the time could be, I don't know, paralegal work, okay? So then you're like, all right, if I'm doing 50%, so I no longer get paid $175,000, right? So that's about what, $85,000. And then how much does a marketer cost? And I do 25%, and that could be, I don't know, let's say $10,000, right? If you hire a marketer at $40,000 and 25%, that's 10. Same thing with a paralegal, that's 10, right? And now your salary is about $9,500 and $5,000. That is your reasonable compensation, as long as you can show the IRS how you broke it down. Now there are also a number of softwares that do that. We use a third-party software that really does a great job. But look, you just use the tax strategy from bringing down your salary from $175,000 to $105,000. Huge, huge, huge deal. Okay. Okay. Next question.
Question from Vicente. Is there a way for an S-corp to report expenses done to a contractor that is now refusing to provide their SSN?
Yeah, that's a big problem. So, so Vicente is asking, I've got a contractor, and I want to give him a 1099 because this person is a contractor, right? And so this is Vicente. This person is a contractor, but now this contractor has finished the job. I want to give him a 1099, but he's refusing to give his information, such as address and social security number. Okay, so can such expense be tax deductible? Now, you may deduct these expenses. It could come under a question with the IRS if you ever get audited, and if you paid the person via, Venmo or Zelle, or you wrote them out a check, at least you have a backup. But one thing that the IRS would look like, well, how do we know that this was actually contracted? Do you have an invoice? So what I would recommend going forward is that do not hire contractors to work for you unless they give you filled out W-9. Okay, perfect. Do we have any other questions, Mariano? Can we do a raffle and call it a day?
Last question.
Last question, guys. We're taking the last question and we're doing the raffle.
When paying yourself through W-2, are you still paying 15.3% or 7.65%?
Yes. So when you pay through a W-2, you pay 7.65 as an individual and 7.65 as a business. That's when you're paying yourself. When you're paying employees, then you pay 7.65 as a business and 7.65 is paid by the employee. But again, if you are a business owner, you pay this double as an employee and as an employer of yourself, which comes out to 15.3%. All right, let's do the raffle.
Okay, we got one more.
One more question? Should we do it?
Well, there are two more.
Two more questions.
The follow-up question is, how is Zelle being viewed?
I'm not sure how it's being viewed. What do you mean by that?
It's a follow-up, I guess, for you.
Well, Zelle, it's in it when you pay somebody. If you paid from the business to somebody, the business could take it as an expense, but you have to be able to. I would not say Zelle is 100% proof of payment because you also need an invoice to be attached to it.
Another question is, what are the rules for an s-corp to report travel expenses related to work? For example, traveling to another state to go evaluate.
Mariana, I don't think you're reading that question loud enough.
I'm sorry.
Like you're mumbling it out.
What are the rules for an s-corp to report travel expenses related to work? For example, traveling to another state to go evaluate another property.
So what's the question? What are the rules for s-corp to report travel expenses? You just take it as a travel expense. Put it in a business credit card or in a business checking account. Always make sure you put all of your expenses on your business-related credit cards or checking account. Okay, so Mariana is got papers and she's raffling off. Do you want me to pick?
I think you should pick.
All right, I'll pick.
You got a lucky hand.
All right, let's do it.
All right.
I get this one. All right, let's see who won. 3-year look back, guys. 3-year look back.
Oh, we got another question coming.
Carlene's. Congratulations, you won a 3-year look back of your business and personal taxes. We're gonna go ahead and put our email address in the chat. Please email, say, hey, I won. If you don't hear from us next couple of days, please just email again. Yep. You can, for those of you that are interested to work with us on your tax advisory and the tax strategy, we're also putting down the link to schedule your tax advisory call with my team, and that is www.taxplanningcall.com. Again, www.taxplanningcall.com. Thank you so much, guys, and till the next week. So bring your questions. Thank you, guys.